Hello, and welcome to the parallel economy, where traditional finance meets the new world of decentralization. Before we dive in, a quick reminder. This episode is for educational purposes only and doesn't constitute financial advice. Always do your own research before making any investment decisions. Today, we are re-exploring how two massive systems, the stock market and the token economy, are built on the exact same ancient idea, ownership. But one sells pieces of companies, while the other sells belief in networks. Stick around, because this is a story that changes everything. For most of human history, ownership was simple. It was about things you could touch: land, gold, property. Your wealth was defined by what you physically possessed. But then, as the first corporations emerged, a revolutionary idea took hold. We started selling something intangible: shares of ownership. A single piece of paper could now represent power, profit, and a say in a company's future. This wasn't about owning a physical asset anymore. It was the birth of the stock market, an entirely new economy built, not on things, but on confidence and collective belief. The stock market did something incredible. It turned ownership into liquid capital. You could buy a piece of a massive company on Monday and sell it on Tuesday. It became a living, breathing auction house for trust and speculation. When companies do well and turn a profit, shareholders get a cut in the form of dividends. When public confidence in a company grows, its stock price rises. It's a fascinating game of valuation, driven by everything from quarterly earnings reports to the unpredictable currents of human psychology. But there's a catch. Every single trade, every transaction has to go through an intermediary. Brokers, exchanges, regulators, custodians. They all stand between you and your assets. You might own your stock, but ultimately, your broker holds the keys. Then, a new chapter began. Crypto arrived, and with it, ownership took on a purely digital form. Tokens are the new shares, but they don't represent a piece of a company. Instead, they represent a stake in a network. A token can give you voting rights in a decentralized project, a share of its rewards, or access to an entire digital economy. And the best part, you don't need Wall Street. All you need is a wallet. Just like stocks, tokens are traded on exchanges. But unlike stocks, they can be sent anywhere in the world, instantly, 24/7. There's no closing bell, no 3-day clearing delay, and no one you need to ask for permission. It's ownership unleashed. Let's talk about rewards. In the stock market, you earn dividends simply by holding shares. In the world of DeFi or decentralized finance, you earn yield by staking your tokens. Accidere. Both are rewards for your commitment, one to a corporation, the other to a network. But staking goes a step further. It's not just about earning interest. It's an active role. By staking your tokens, you are helping to secure the blockchain itself. Your tokens become collateral, helping to validate transactions and keep the entire system running, honestly. You could say that dividends are a measure of a company's profit, while staking is a measure of a network's participation. This new model introduces the idea of ownership without walls. In traditional financial markets, access is gated. To trade stocks, you need a brokerage account. To invest in international markets, you often need to go through a large institution. It's a world of gatekeepers. In the token economy, your access is your private key. It's a password that only you control, giving you direct access to your asset. There are no borders, no brokers, and no middlemen telling you what you can or can't do. But that freedom is a double-edged sword. If you lose your key, you lose your assets. Forever. There's no customer service hotline for crypto, no one to call to reset your password. DeFi removes the middleman, but it also removes a safety net. So, what gives these things value? It all comes down to the psychology of belief. Stock prices rise because of tangible things like earnings reports and future growth expectations. Tokens, on the other hand, rise because of belief in the technology and the growth of their user base. In other words, adoption. Both systems fundamentally rely on trust, but the object of that trust is different. The stock market trusts in regulation, corporate governance, and audited financial reports. The crypto world trusts in code, mathematical proof, and the radical transparency of an open ledger that anyone can verify. At the end of the day, value in both systems is still a deeply human concept. It's a collective agreement about what's worth something and what isn't. Naturally, this new, wild frontier has caught the attention of governments. They understand the stock market. After all, they helped build it. They license it, they tax it, and they have armies of regulators watching over it to protect investors. But the token economy is a completely different beast. It's decentralized, borderless, and often pseudonymous. This is what makes it so innovative, but also so unpredictable. Regulators are now grappling with a monumental question: how do you protect investors and maintain financial stability in a system that, by its very design, has no central point of control? It's one of the biggest challenges of our time. The future probably isn't a battle of stocks versus tokens. It's more likely a fusion of the two. We are already seeing the beginning of a world where everything is tokenized. Real estate, fine art, carbon credits, even stocks themselves are being represented as digital tokens on a blockchain. In time, the line between Wall Street and Web3 may blur until it disappears completely. What started as a grassroots revolution against the old system could end up as a grand evolution, a powerful synthesis of old-world financial principles running on new, decentralized rails. When you step back, you see a clear progression. Ownership has evolved from physical fields to paper shares to digital code. Each era has redefined what it means to belong, what it means to invest, and what it means to believe in something. The token economy isn't here to replace capitalism. It's here to rewrite its operating system with math, transparency, and instant global access. It's the same core principles, just running on brand new rails. This is the parallel economy. If you found this exploration valuable, please hit that like button, subscribe to the channel, and share this video with someone who still thinks the stock market is the only game in town. Thanks for watching, and we'll see you in the next one.